retail inflation is something that you should focus on. It was at a record low in the month prior, and it's expected to hit 0.7% in the latest reading. And this is important because it has a bearing on nominal GDP, which corporate earnings track. So let's talk about the setup and what's expected and the implications of that. First, Vishwanath Nair. Vishy, what's expected to cause this slight uptick? And is there a possibility that we undershoot once again?
Right, so undershooting is definitely happening, but let me talk about the slight uptick. You've got 0.25% retail inflation in October. That is going to slightly inch up to about 0.7% in November. That's the expectation. This is because of a couple of factors, actually. The base effect that was helping food inflation so far is going to fade away, and you're going to start seeing some of that food inflation coming back into the math. So specifically on vegetable prices, just on the tomato prices, you've seen between October and November, those prices have inched up by double digits. So that is going to show up in the headline number as well. As far as core inflation is concerned, which takes out your food and fuel numbers, that is expected to remain stable at about 4.4%. The headline inflation number is going to be well below the 4% number for the next few quarters. Even the Reserve Bank of India in its recent assessment of the inflation number has said that for FY26, they're expecting a 2% inflation number. This is already a revision from 2.6% that the Reserve Bank of India had done in the previous policy, in the October policy. So in December, they've said 2%. Wide number of economists expect that it's actually going to undershoot that 2% number even for this November reading. This 0.7% is the sort of mean estimate. There are some economists who believe that you may even see a negative reading in November, but that we'll find out at 4 p.m. when the data comes out.
Okay. 4 p.m. is when the data will come out. Will we see a negative reading for November? I'm actually going to get Gaura Sengupta and stay on with us, Vishy. She's Chief Economist at IDFC First Bank. Gaura, very good morning to you and great to have you on the show with us as always. Is the very low inflation data a bit of a mirage? I ask this because even last month we had this record low data base effect. How long do you think this will last, and what are your expectations that you've penciled in for the data point today?
I would say base effect have definitely played a part, but a large part of the, I would say the majority of the disinflation is thanks to food. Food inflation last month had declined by 3.7% year on year, and it has almost a 50% weight in the CPI basket. So the majority of the moderation in inflation is thanks to food. Even this month in November, we expect food inflation to continue to decline by around 2.8% negative. A little less supportive base, so hence even we are tracking a 0.7 overall headline. So I wouldn't say that there isn't genuine disinflation. There is actually, if you look at core inflation, which is basically you remove food, fuel, gold, silver, then even there we are in near historical lows. I think October we had seen it go down to almost 2.6%, which is a historical low. This month also it should be somewhere near maybe slightly higher, but close to historical lows. Also this month, November, you'll see the remainder pass-through of the GST cuts. So some pass-through has already happened in October. Now the remaining pass-through is also expected in the month of November.
Gaura, this is Vishwanath joining, and just a quick question around inflation and then signs of consumption in the economy. When you're looking at the core inflation about 4.5%, that's holding strong at that number. But is that enough to indicate that you may see that consumption resuming in the economy? Because at the end of the day, that is what policymakers are aiming for, right?
Consumption, we are already seeing signs. For example, let's say if you look at Q2 high frequency, if we look beyond the GDP, on a monthly basis, rural consumption had become broad-based. You saw tractor sales, two-wheeler sales, the demand for jobs under NREJ, which is usually a sign of distress employment demand, that has been declining for several months now. So even you look at company commentary, which I think is the best yardstick, rural has definitely become broad-based from Q2. In Q3, thanks to the GST cut, urban definitely responded. And I don't think it was limited just to the car industry. Consumer durables also picked up. You look at the detail of the retail loans, for example, credit card, consumer durable loans, there was a definite pickup. And now what we are tracking in terms of vehicle registrations for the beyond the festival season, there is some normalization, which is to be expected, but it is a normalization. It is not a slump. So we are hopeful that there will be a pickup in urban consumption. I think the best indicator for whether urban will revive is wage growth. And I think Q2 corporate results indicated that the wage growth in the urban sector in real terms has picked up because of this moderation in inflation and the fact that even on nominal terms the wage growth has picked up, but we'll need to see a few more quarters of this pickup to sustain for the urban recovery to become stronger.
Gaura, thank you so much. Gaura Sen Gupta there joining in. Vishwanath, thank you as well for joining in on this conversation.